Hello everyone and welcome to today's morning report. Charles Prices on Thursday the 1st of September with me, Richard Perry, market analyst at Hand Tech Markets. We've got a relatively sort of mixed open really, nothing too significant in terms of direction. You've got a slight air of dollar strength that is beginning to sort of develop as the European session is sort of moving on. You've had this sort of really strong move on dollar index ever since that speech from Janet Yellen on Friday, where she gave a sort of mild hawkish lean in her sort of rhetoric, and that sort of move is sort of consolidated yesterday, but just slightly higher again today. You're seeing sort of these treasury yields starting to pick up again. The 2-year continues higher, and it's interesting that the 10-year is slightly higher, but again nowhere near the sort of moves that we're seeing on the 2-year, as that spread between sort of the 2s and the 10s really continues to drop away. It is interesting that what we're getting is this dollar strength coming amidst the oil price, which has fallen away. The oil price in the last couple of weeks has dropped away quite sharply, and yesterday's drop in the oil price came on the back of, once again, the inventories report. The oil inventories for both stocks, for crude stocks and also gasoline, came in higher than expected. So that sharply dropped on the oil price, and the sort of gains that we saw early on in the oil price today have just sort of drifted away again. So that's again something that's pressuring the markets. But in terms of your equity markets, actually we're slightly higher on the day, and we've got the PMIs all out today. Now let me show you the data for what we've seen this morning, if it comes through. Here we go. Okay, so this is all the data that we've had out today, and we've got all these PMIs that have been announced this morning. Now the first one I sort of would point towards is the China data. The China data came in on the official above 50, back above 50, 50.4, which was higher than 49.9 expected. But interestingly, the Cajun data was slightly below the expectation. So slightly mixed, but I think markets have sort of moved on that sort of improved risk appetite from that sort of official Chinese number, the equity market certainly, and also you're looking at the likes of Aussie and Kiwi dollars, which are both slightly outperforming today. But then you look further down this list and you sort of scan across to Italy, which quite significantly underperformed or missed expectations. France also missed expectations. Germany was basically in line, but the Eurozone data mildly below expectations. But interestingly, again, all these numbers are lower than their reading of last month. Interestingly enough, Eurozone data as well, 52.0, 51.7 this month. So it's all sort of slightly lower than where we were last month. You got the UK data at 9:30, 49.0 is the expectation. 48.2 was that number which was just after Brexit. So it'd be very interesting to see how this number gets impacted today. Then we've got also the US data at 3 o'clock, the ISM manufacturing data, 52.0. So again, and that would be a second month of second month of decline on that number. So above 52% is still expansionary, but just decelerating in that expansion. And on the weekly jobless claims, 265, again, we've basically been around this sort of level for the last few weeks. Again, I can't imagine that will do a great deal at 130, but we certainly are looking out for this PMI data that is all out this morning. So that takes me to my chart of the day, which is the Aussie. Now we've got the Aussie, which has been sort of falling away in the last few weeks as this dollar has been strengthening. We've been finding these strong bear candles. You had this big bearish engulfing candle on Friday, which was on that Yellen speech. Again, another one on Tuesday, big bear candle. Interesting, we saw the breakdown on Friday below the 75.80 mark. That was the low on the 22nd of August. That was an old support, and that's become basis of resistance. 75.81 on Monday, 75.79 on Tuesday. So that is clearly a basic basis of resistance the market is looking out for. You've had a mildly positive, very mildly positive positive candle yesterday. Spinning top, you'd argue, very small body, mildly up on the day. Again, today's move, you're seeing these moves to either moves to the downside or quite long upside tails. Pretty much of a what's the word? A sequence of lower highs, really, basically through these times, all lower and long upper shadows on these candles. That suggests the bulls are losing impetus, even on the up days, are losing impetus into the close and dropping away. And pretty much all of them have been followed by negative candles the next day when you've had these long upper shadows. So again, you've had a move today to the upside, but losing impetus. You've got the momentum indicators now below 50 on the RSI. Stochastics at a 3-month low. MACD lines coming back as well. Now it looks like, I think that what we're doing is coming back towards this 74 big figure pivot. It's a long-term pivot. 74 big figure area is basically where the has been a pivotal level for several months, really, and it could well be that we're coming back towards that. We had a dip back to that in early July and also early August. Late July, sorry. And it looks like at the moment this falling away. We could well be coming back towards that level again. So 74 big figure. Here we see in the hourly chart where 75.80 is your basis of resistance. Last couple of days. And dropping away. So rallies, I think, are a chance to sell now on the Aussie. So you've got a resistance band zooming in there, sort of 75.30 area, 75.40 up towards 75.80. So you've got a pretty decent band of resistance there, and you've already dropped away from there this morning. So I think that is sort of a sell zone where sort of these momentum indicators on the hourly have a chance to unwind back to. Look at the MACD lines back towards an area where they've been selling off in recent days. Stochastics falling away, RSI failing around that 60 point again. So it could well be that we've seen the rally, and it could well be that we're going to retest the lows once again. 74.90 initial support, but ultimately 74.15 is that low of late July, but again, as I said, that pivot line 74 figure could well be where we're coming back to on the Aussie. But we've got payrolls tomorrow, so a bit of volatility tomorrow, but in front of that I wish you good luck in your trading today, and I'll speak to you later. Thank you.